Hey, what's up YouTube and Triple T members? Jeremy Barber here, owner of Trading the Trend chat room. The link is in the video description. Come check us out. Free 7-day trial. The end of day plays from yesterday were not very good. The market was pretty crap, especially this morning. It did recover quite nicely throughout the day, but the end of day plays gapped down with the rest of the market. One of them recovered, the other two, one recovered to, a minimal loss, and the other one stayed down pretty much all day. And when the market starts getting iffy like this, you've got to pull back on your position size, and you can't be, using 90, 100% of your account to go into plays, because it's very iffy. And I've been discussing those warning signs over the last couple days, and we're seeing it play out. You can't get oversized. There will be plenty of time to force the issue with the market, plenty of opportunity to make huge plays, but this isn't it. You've got to just survive when the market's down. So that's pretty much it for the end of day plays. Today I'm going to discuss one of my favorite chart patterns, and that's a triangle. You have 3 types of triangles. I put together a little video to show you those. Also a false breakout of one that happened today. So again, I use that every day on the daily charts, the intraday charts. It's pretty useful. You can use it on the weekly chart if you're swinging longer than a day or two. It works on all time frames and has been pretty reliable for me. So here, check it out. Today we're going to be discussing one of my most often used chart patterns, and that is triangles. You have 3 types. There is an ascending triangle, which is what you see here with the flat top, the bottom sloping up towards it. You have a descending, which will be shown later. That would be a flat bottom, and the top is sloping down towards it. And then you have a symmetrical, or often triangles get labeled as symmetrical, or they're not truly symmetrical, but whenever you have the top and the bottom both sloping towards each other relatively at the same rate. And that's what you see right here, this little triangle right here. So an ascending triangle most often is going to break to the top side. Doesn't mean that it won't ever break to the downside. You're probably looking somewhere 60 to 65% that it will break to the top side. A descending, same thing, except for it will more often break to the downside. And then these right here, a symmetrical triangle, it's about a 50-50. There's no rhyme or reason. And there's actually some actual practicality in the reason they break the way they do. This one, you obviously are getting fewer buyers and fewer sellers the further you move down this. The buyers, they push it way up here. The sellers, they push it way down here. You don't have near as many buyers, so they're not able to push it as high as this one. And then coming back down, you don't have near as many sellers, so they're not able to push it as far down. And it just decreases, and that's kind of at an equal ratio that they're decreasing, causing these lines to be about the same angle. Now, on an ascending triangle, you've got buyers that pushed it up to here, and then sellers sell it off down to here. Now, this one's not a great example of this. I would like to have had one more time where the buyers push it up. So say the buyers pushed it up to here to the same point. You had the same amount of buyers, which you eventually did. They eventually got it back up to the same point. But then the sellers, when they sell off, they don't push the price down as much, causing this line to slope up towards it. And eventually what happens is you run out of people selling it off. So once there's nobody left to sell, you get the breakthrough. Same thing with the descending. The further along it goes, you have fewer people that are buying it, so they're not able to push it up as high. And then you've got the sellers that bring it back down to the same point. And then buyers aren't able to push it up as high. And that's what creates that top line sloping down. And eventually you run out of people to buy it all and it breaks down. So first we're going to take a look at this symmetrical triangle. In theory, your move should be as large as where the triangle starts. So we've got about 7.15 to 7.45. So that's about a 30-cent move you can expect once it breaks, whether it's up or down. This one happened to break to the upside. It broke out right here at about 7.35 and moved to about 7.75. So that was about a 40-cent move. A little bit more than this would have told us, but enough to profit off of. And, actually gave a little bit more than we would have expected. So nothing wrong with ever taking a little bit more profit than you were expecting. Now this one right here is actually we had this ascending triangle that broke out, but I would call this a false breakout. And I will zoom in to show this one in a little bit better detail. So we had our triangle right here being formed. You can see it tried to break down a few times, but for the most part, it rode this line up. So here we're looking at about 7.05 up to 7.75. So that's about a 70-cent move is what we would have been expecting. And I was actually kind of commenting on this one in the Discord room as it was happening today. So we ran up right here to this 7.75, got rejected one last time, and then I actually jumped in on this one right here on this first candlestick that closed over it. And that is what confirms a break of resistance or break of support, is whenever you actually close a candlestick on the other side of it. So I actually got in there. I ended up taking about 8 cents on this because weren't really getting the move. We were just kind of chopping around once it broke through. I realized that, hey, this isn't really going to move like I was expecting. Take my little bit of profit, move on. Bad market today, so take what you can get. So you can see that once it broke out above, didn't move too much. It broke back into the triangle. You can see it came back, checked this support line one last time, went back up, and actually tried to break that 7.75 line again and was rejected. And if you didn't pull your profit up here, that would have been a clear time to get out. Once it was not able to break back above it, that would have definitely been an exit. And if that wasn't your exit, the clearest exit was this huge candlestick right here with huge volume as well, breaking this support. That would have been the third exit. So again, that was a false breakout. You see that often where everything is set up perfectly. We even had, after this candlestick that broke out right here, this next candlestick right here had this huge volume on it, but they just weren't able to push it anywhere. So those are the symmetrical and the ascending. We'll flip over here, look at this descending. And this is on the daily chart. These patterns can be used intraday, 1 minute, 5 minute, 30 minute, hour, 4 hour, or they can be used for swing plays on the daily chart. So this was a descending triangle. Again, you have the flat bottom, top sloping down towards it. And again, this isn't a great example to see the fewer buyers coming back in, because it kind of just rode this line for a while. We didn't have the nice peaks and valleys until about right here. So you could see that if you wanted to draw another trend line from here down, it would have been the same thing. But you had fewer buyers come back in. They're not able to push it as high. You had a false breakdown right there. And then this next candlestick actually jumped back up within it. And then we went back up, fewer buyers again than previous. And we got the clear breakdown right there. And then you can see over the last 4 or 5 days, we've continued to move down. This triangle, $9 to about $5.50, so about $3.50 is what this triangle is. So far down to from 550 to 4, it's given about 70-80 cents so far. Again, I'm not concerned about getting this full run that you're supposed to get, because you may not get that full run. A 70, if you had played this short on the break and then even waited on the confirmation the next candle, you're looking at a 70-80 cent per share profit right there, and that's a pretty decent profit on any given play. I'm going to show one more symmetrical triangle right here. Okay, so we've got the bottom line sloping up, top line sloping down, and then we get this candlestick right here that gives us a clear breakout. Barely, it just barely closes above it. So even if you waited for the next candlestick, this is definitely a clear breakout above this top resistance line. And so this move about 480 to about 320, so about $1.60 is what this is. And we broke out at 410, and we actually ran up to $6. So again, one that moved further than this would have indicated, but if you're playing this long, there's nothing wrong with having more profit. So that's pretty much it on the triangles. Again, ascending is going to break to the top side. You'll also see them called flat top triangles. Those are going to break to the top side more often, descending to the bottom side, and then the symmetrical is a 50-50. Can be found on every time frame, can be traded the same on every time frame. You should be trading your intraday charts for day trades, your daily charts for swing plays, weekly charts for your longer swing plays. So that'll wrap up our lesson for the triangles. Okay, so that should show you how I use triangles and what they're used for and what can happen with them whenever you get that break to the downside or the upside. I will show the results from our end of day plays from yesterday, and then the only play that I put out today was ticker F Ford. Looking for, or we have support at 1150, and then again around 1130. Much below that, we'll be exiting the play, and that's kind of the game plan on that play. Thanks for joining. Good luck and stay green.